Hello and welcome to Let's Invest Right. With me is Essen and I'm Farooq. How are you, Essen?
I'm good, Farooq. How are you?
That's great. I'm also good. Essen, today we are here to discuss not about a particular stock or not about a growth opportunity, but we are here to rewind what happened in 2020, what kind of opportunities we had, what kind of opportunities we are going to have from now onwards, and what were quite few mistakes which investors like us we have made, and what kind of opportunities we have availed, and uh, all those kind of things which happened in this year. This year was an unfortunate year for many, and howsoever, in terms of investments, in terms of availing some opportunities because of uh, this kind of stocks which were really traded in below their fair values. They were really at discounted price. They were available for everyone. Howsoever, there was some different some difference of opinion, and people have done a lot of mistakes. They have cashed some opportunities. So let's discuss. So yes, Essen, how was
Well,
2020
Farooq.
in terms of investments?
Well, Farooq, this year is as you have mentioned, it's up and down. It's been a roller coaster. We have seen so much in this year. Like it feels like the 2020, in the middle of the 2020, it felt like 2020 will never end. Like we have been like at home, like lockdown, all this, no flights, no transportation, and even we were having fear of going outside. So traditional shopping has changed. Many things have changed. The consumer pattern has changed. Consumer behavior has changed. People have started thinking in a different way. Well, now the trend is people are shopping online. Even the groceries have been moved to online. Previously people were only buying going to the stores, and online shopping, at least for grocery, was not that much common. However, things have changed, and all these pattern changes and have impacted the stock market, have impacted the companies, and as a result it has impacted the stock markets. If you look at it from the beginning of the year, like Jan and Feb were very good, but in March we were expecting it because the COVID was rising across the market, across the globe, and it was spreading like anything. And with all this, the stock market was severely impacted. So in March, when the market dipped in, and many people, many investors were like having fear of, even especially the retail investors, they were like having fear, and they sold out everything. And it was really not only this, we lost so many lives across the globe. That's something that
That's really
uh,
sad. That was really sad.
correct,
And
correct.
so, Essen, let's discuss what was the first reaction of the market in the month of March. So, guys, let's see what was the reaction of the market once we had this lockdowns, and yeah. So, Essen.
The market like dipped at a very speedy pace. It went down like this, and many stocks, even stable stocks, those who were like not moving for years, have were gone down. Even if you look at some of the stable stocks, like as we say, the defensive stocks like Coca-Cola, like McDonald's, like Pfizer. Many stocks like these, even Microsoft, all these stocks went down suddenly with these. Not only this, so this is only for the defensive stocks. If you look at the growth stocks, the stocks that were growing like Tesla, even that dipped. Stocks like new stocks, new shares, all the
So it
market
would
was
not
like.
be wrong to say, as we can see on our screen, uh, you can see many stocks, they were dipped in late February, and then in the month of March we have seen this dip, and almost no matter what industry it was, you can see the tech stocks. They were falling like the same pace as of if we are talking about, like if we say the travel and tourism stocks, we talk about any industrial stocks, because nobody could even imagine what is going to happen. So there was a panic. And then let's discuss what kind of a shift in terms of investments we have seen right after the month of March. So SN, then what happened suddenly? At the beginning everything was falling, and there was no limit we could see, and people were really afraid what is going to happen. But then suddenly we have seen some industries which you are going to discuss, which have seen the boom, and the prices actually went up to the maximum level they have never seen in their share prices.
Exactly, Farooq. So if you look at stocks, some of the like tech stocks, they went up after March, like at a great pace. Stocks like Amazon, because people moved to online shopping. So the stock for Amazon and the demand, and even Amazon was like having facing many challenges to deliver and cope up with the orders. Not only this, many retailers moved from traditional businesses to online businesses. That helped, like, and those who lagged behind were like having a severe impact. So most then they started moving towards online businesses.
That's correct. So what we have seen in the second phase, like first phase was like nobody was aware what is going to happen, and everyone was selling their stocks, and people were afraid, and they were taking out their money from the stock markets, and we have
Correct.
seen the severe crash. And then we
Let
have
me
seen confidence in companies which were supporting at that time the purchasing of many things. Like everything was done online by sitting at
correct.
home.
As you said, the travel industry was impacted. So people started moving towards Zoom calls, or the business meetings were being held. Even the online classes were being held at Zoom. Some of the stocks really shoot up. Like as we were discussing, Amazon starting price was 1906 at the in 1st of January, and it moved. Currently, it's selling at 3172. So there's a growth of almost 66% on Amazon. If we look at the Zoom price, the share price started at 71.9 on 1st of January, and currently it's selling at 375, which is showing a growth of 422 times. Even the
So
Zoom
just
has
in eight
started.
to nine months, just in
Yeah,
8 to 9 months, people have really shown up a very good potential and their confidence over these stocks, because nobody knows when things are going to be when the
exactly.
things are going to be normalized.
Exactly, but with the vaccine coming up and the many airlines saying that by second half things would be much better, so the opportunity in Zoom may be like Zoom may go down, but the ways of working have changed. So maybe I think it would be a mix of some business travel and some meetings. Some of the meetings being still held on Zoom. So it should be a combination, I believe, in the way forward for ways of working.
As in, we have seen investors like who are the gurus of this market, like Warren Buffett. They have suddenly changed their strategies. He used to own the stocks for not less than 10 years, and we have seen him selling stocks of airline, oil companies, and even we have seen in this first and the second phase, oil price actually reaching the negative levels for the very first time in the world. They have seen that
Exactly,
oil
exactly.
actually traded in a negative range, and suddenly investors, whom a lot of people like us, we follow them, like Warren Buffett, Carl Icahn. We have seen them actually selling their stocks and moving from travel and tourism to tech companies then.
Exactly. If you look at what he has done, he was holding cash for so much of time, like so holding cash, and then he invested. Snowflake is one of the companies where he has invested a big amount. It was before the IPO. He invested a big time in the company, and the company is going up. And even Snowflake, even this year, if we look at it, the overall year, it's been so many IPOs, so many companies have entered the market this year. You talk about Unity Software, it's one. There's Airbnb, Arn Financials, and these are big companies. DoorDash is another one. Like these are big IPOs that has entered the market, and even after they're entering, like the IPOs have started going up at a very rapid pace. And one more point, so Warren Buffett, as you were saying, this was only the second IPO after four companies where Warren Buffett has invested at the time of IPO.
As you have mentioned in the previous video where you were discussing about Snowflake. That's
Yes.
correct, SN. SN, let's also discuss, and then we have seen people coming back. As soon as we were getting the news, the positive news, the cases were dropping, and the hospitalization rate was dropping, and so was the confidence of the investors was again going up. And then people, we have seen a couple of cycles in last 9 months, where we have seen just a slide of a positive news was taking the market to an
Up and
upward
down.
direction.
Exactly. If you remember in June, the market like shot it up suddenly all of a sudden. as we were seeing, like there's improvement, like the lockdown would be eased up. See, that's the main thing. If people started selling at fear, actually that is the time to invest more. If you have more, put it here. When the stock is like, if you're buying anything that's being sold at a lower price, you'll buy it. Like you see it, it's on sale, and you'll buy it. Why not same for the stocks? If a company is being sold at below its fair value, buy it, invest it. Look at the book value of the company, and then invest in those companies. Like that's one of the easy things that as an investor you should be looking at it.
Actually,
You should be.
that's correct. I totally agree with you. But on the other side, it's also really important for investors like us to see where the market actually is going. What are the actions taken by the gurus like Warren Buffett or Carl Icahn, who are very well known investors in the world. So even it's also a time where you have to take money from take money out from one kind of a stock and invest in a trending stock.
That's right. You need to have a diversified portfolio. Invest some in growth stocks. Invest some in like dividend-paying stocks. Invest some in like that you think would be the future, like tech companies. Could be Apple. Could be Tesla. These stocks could even growth stocks like Neo, and as we said, even Tesla would be part of it. And Microsoft, Google, all these are like stable stocks, and not moving that much, but slowly and gradually they are like improving over the passage of
That's
time.
correct. So, guys, this is a little bit of introduction what we have seen in first 2 3 phases of last 8 to 9 months, and then we have seen a boom in an industry which we have discussed in our previous videos. We have seen a tremendous growth in Tesla, which was the part of EV boom where it all started. Actually, we have seen Tesla. I think it reached as low as less than $300 or $380, and
Before the
then
stock
from
split, yes, yeah.
before the stock split, yeah. So that is 4 times we're talking about right now, and then from there it reached to $2,000 and even above $2,000 level, and then they splitted that stock. So actual value, if we convert what Tesla is trading right now before pandemic, so it's
So
even
Farooq,
more
the
than that.
starting price for Tesla on 1st of January was $93.8, and currently it's being like traded at 661.77. So there's a growth of 605%. That's 6 times of your investment.
Six
If
times
you,
of your equity. Imagine, guys,
yes,
that was the opportunity people have, and there are many people who believe that yes, this industry is going to go up, and people have maybe taken out their money from oil companies or travel and tourism companies, and they realized their
put it
losses
in
at
this.
that time, and they made a lot of money multiple times. It's like
Exactly.
six
Even
times of your investment.
if you look at the other stocks, like it's competing stocks, the Chinese players, for example, Neo, if you look at it, the trading price on 1st of January was 3.24, and it's now trading
And there
at
were 1,000 times of your.
45.77.
Exactly.
So
That's
it's
correct.
1300 times growth, 1300 growth, or 13 times of your investment. So you can imagine, like in terms of the growth, this is like massive growth. And no doubt, there's like many people are saying that the EV stocks are overvalued. But if you look at the overall future, this is like here to stay with the growth. The PE ratio, people are saying the PE ratio is too high, but it's a growth stock. If you look at the PE ratio, what is PE ratio? It's the price to earning ratio. It's a growth stock, so the company is not earning that much. So with lower earnings, the PE ratio is expected to increase. But with higher deliveries, higher earnings, improvement in margins, the earnings would increase, and then the PE ratio would come down. So you can't compare the PE ratio of a growth stock versus a stable stock like Apple or Microsoft.
So, SN, as we have discussed EV boom a lot in our previous videos as well, there was one more industry which has really seen a tremendous growth in last 6 to 7 months. That was the solar companies, which were like Enphase, Solar Edge. Even Enphase, it traded as low as $38 per share, and now it's trading around more than $150. And so was Solar Edge.
Well, that's right. Even if you look at the overall energy, people are moving towards renewable energy. Why EV is growing up? Because it's more greener, it's more like use environmental friendly. So these are the things that would define the future. Many even companies are shifting their focus and thinking about the environment. So That's so in the future, organization not only need to be like socially corporate, social responsibility, as we say, not only socially responsible, but they
The
need to be
CSR part, yeah, the CSR part would be
environmental friendly and environmental responsible as well.
up till now, from last 7 to 8 months, there are many companies who are trading now at their peak, but there are many companies like, or even oil companies, Shell, or even cruise liners or travel and tourism stocks, despite few like Hertz from travel and tourism, which unfortunately was had filed bankruptcy. Some other stocks like JC Penney from other industries. There were many examples as well, which couldn't get that much of cash support, and they had to file for bankruptcy supports.
That's right. Even if you look currently, like the sales are not at the same level, pre-pandemic level, as we say it. They are not. They have not reached that level. So if you look at companies like even in Rolls Royce are having even Boeing and SPR, they have not reached the same level, because if airline industry is like halted, so these suppliers like Boeing, Airbus, they are not having the same level of production. So they'll not be producing the same. So they'll not have the same orders and same revenues from the operations.
But as in, even in that case, I would say, of course, we have not seen the normalization as of now. The travel and tourism is not the same, and we don't see it be the same in couple of years from now. It's not like from next month everything is going to be as simple. Howsoever, we have seen the prices, most of them have retraced almost to 50% right now. So right, pre-pandemic, although things are not completely settled, as soon as we got the news of vaccine, which is a very positive news and a very happy news for everyone. So we have seen already, because people have that much confidence on these companies, on their valuations. So still a lot of opportunity people have grasped already, right?
Yeah, even there's so much still to be grabbed. Like some have already grabbed it. Like if you look at the airline stocks, they are still trading at a lower price than what they should be at the pre-pandemic level. Similarly, aircraft manufacturers like Boeing and Airbus, as we said, and on the other hand, the cruise industry is still down, still lagging behind. There's a massive opportunity. You can have like 5 times of your investment still. But if you look at it, cruise, I think airline would be the first one to go and become normal. So cruise would be the income in second phase. So yeah, that's how it is.
We have seen
But
in the same way, everything which comes under travel and tourism, it will take some time. Whether we talk about hotels, we talk about airline, we talk about cruise liners, or rental or lease companies. So eventually things will get better with time, but it will take some time.
that's right. That's right. But if you, as you talked about the rental companies, car rentals, like Avis is almost like reaching the same pre-pandemic level. But that's also because of the Hertz. Like it gave a negative impact. With Hertz being delisted from the stock exchange, it helped Avis, and people started
Its
shifting
competitors
from
too.
there to its
That's
competing
correct.
firm, and it
That's
helped
correct.
in, yeah. And we generated good enough revenue from good enough profit from Avis stocks.
That's correct. That's correct. And we lost some money in Hertz as well.
That's fine. That's part and parcel of the game, right?
Exactly. So, guys, now we are going to conclude in a way that what conclusion we have taken from our investments. We have lost money, we have made money, and we have our targets. So, Essen, could you conclude for us? How we are investing in our portfolio, so that maybe it can help someone watching our videos right now.
Yes, but so for anyone looking at it, it should be, you need to be like know what exactly you are trying to do. You need to have a diversified portfolio, but look at the different industries where the industry is growing. If you look at now, the patterns have changed. Like people, as I said, were at home, so they were watching more of Netflix. So the Netflix is already trading at higher price. Similarly, Amazon, but there's still growth potential in Amazon as more and more people are starting buying online, and this growth will continue. So the stock will further evaluate and further elevate, and it will go up again. Companies like Shopify, like who's providing online businesses, many companies, small businesses have used Shopify to have their online businesses. Its stock has rise almost 200 times, 200% this year. So This is like a growth stock. And then you overall look at industries like EV and industries related to EV. That's another growth potential. Other than that, if you're willing to take some risk, you can invest in airline stocks. The higher the, again, as it's been said like by someone already, higher the risk and higher the returns. If you want to invest in companies like airlines and airline manufacturer, you can have double or triple your investments. If you want to have more risk, and then you can even invest in cruise, you can have 5 times of your return. But I would suggest have a diversified portfolio. Have some of these stocks like stable companies, probably like I'll have Apple as my highest in my portfolio as a percentage of total investments, because it's stable, it's improving, it's innovating, and coming up with new and new products every time. Right now they are like moving into fitness industry as well, so, and giving competition to some of the players in that market. So it's expanding. Also, Apple has planned to enter the EV market. So, and they are saying that they would be launching an EV by 2024. So they are looking beyond, like beyond the gadgets and computers. So that's an innovative company. That's where I would be investing more. But overall, if you look at it, you must have a diversified portfolio with different industries, looking at the overall picture, overall profitability, and the balance sheet. How much debt the company has, how much equity, what's the equity ratio. These are some of the things that we look at it when we invest.
So guys, just to conclude, I would say it's very important to have targets of your investments. Number one, you should have targets, whether you're investing $100 or $1 million. It's very important for you to have targets. What kind of profits you are looking for, what kind of tenure you're looking for. So the targets are very important. You must have a diversified portfolio. No matter you are looking for a return in a stock. However, it's very important for you to diversify, like we did. We did not only invested in Avis, we also invested in Hertz. Somewhere we lost our money, but we made on the other part. So, you don't put all your eggs in one basket. So it's very important for you to have a very diversified portfolio. It will somehow limit your returns, but it will also save a lot of risk side of your investment. Third, it's very important for you, as mentioned, it's very important for you to do proper due diligence. It's not about what we are discussing right now. It's very important for you to go and find out what are the fundamentals of those companies. Even if you are investing $100, because it's your money, it's very important for you. It's not gambling. It's you are investing. You're believing in a company. So whether it's an EV industry, whether you invest in Tesla or Neo, it's about the industry. You are looking forward for that industry to grow in couple of years, like in 5 years or in 10 years. So that's how you should make your investment. Fourth and most important, patience. It's the key for your investments to grow. Don't get panicked so soon. Yes, news sometimes it gets you to really lose a lot of hope, and you sell your stocks. Don't lose hope, because just think about why actually you invested in that company, whether those fundamentals have changed or not. Yes, at times you need to close your positions when you're seeing the fundamentals have changed for that company, not for that industry. Industry somehow would come back in a month, or in a year, or in 10 years. Howsoever, the fundamentals might not come back for that particular company of that industry. So if we are seeing the company is losing its vision, the company is losing its founder, like we have seen with Nikola. Nikola was a very good company, a very good concept. However, it lost its founder. Now companies are taking out their contracts with them. So we need to take our decision rather than actually taking more positions on that company. And fifth and most important thing is, guys, it's our money. Let's invest right. So it's really important. And thank you for watching our videos. And if you haven't subscribed yet, please subscribe and like our videos. Thank you very much. Happy New Year in advance.
Thank you.